If this is your first time here, want to say thank you. I know that this is your evening and probably your time to relax and unwind, and you're choosing to come here and spend your night with us. So just want to say thank you. That does not fall short on us. And if you were not here for last month's webinar, it was our first. We kicked this off in July. And the Padrone Loan Team, we are starting a series of just valuable webinars, both for our past clients and our prospective clients. So do us a favor, and if you ever get one of those invites, and we're going to be doing this on a monthly basis, if you know someone who could gain value from the topic that we're presenting on, please feel free to forward that invite to them. The more the merrier. We want to make sure that we are providing value for as many people as possible. So having said all of that, we are welcomed here tonight by Martin Garcia, who is owner of MAG Law and Select Titles North Texas Operations. And we are going to be going over the 1031 exchange and making sure if you are either currently investing in real estate or you have plans of it in the future, you're maximizing your investment and making the most of your hard-earned dollars. So with that, Justin, I'm going to kick it over to you and Martin, and we will get this started.
That sounds good. That sounds good. Thanks for the intro, Val. Martin, thanks for being here, buddy. I've known Martin for, gosh, probably 12, 13 years now.
It's been a while.
Yeah. Went to law school with my wife
me.
at Texas A&M School of Law. Extremely knowledgeable in terms of
Time
title.
out. It was Texas Wesleyan whenever I graduated. No offense to any Aggies here on the call, but it was Texas Wesleyan. I'm a double ram because I went to Wesleyan undergrad as well. No, she did as well.
There you go. Ram up, baby. But Martin's extremely knowledgeable in really all things 1031 exchange. And so this is a topic that gets brought up all the time with people that are buying homes and what to do with it. How do we get out of it? How do we save taxes? And so wanted to bring Martin on and just kind of have him share his knowledge, and we'll go through some questions. We really want to make this interactive. The best thing for us is if you're typing in the chat, you're typing in your questions. So if you do have any questions along the way as we're going, please feel free to put that in the chat. We'll get that to Martin with his legal background, with his title experience, being an escrow officer and a partner at the firm Select Title. Martin, we're glad to have you here tonight, man. Thank you.
Yeah, thank you for the platform, and thank you for all the attendees. As Val said, taking time away from your nights to be with us and mastermind a little bit and hopefully learn something.
100%. Well, let's jump into it. 1031 exchange. What is it? Why is it valuable? How does it help families save some money, make some money, and improve their financial situation?
So, as you said, I like interactiveness. If you want to unmute some folks, I always open up as you just did and ask, what do you think it is? Or even if someone wants to pose a question on the chat, or at least a response on the chat, that's how I kind of want to gauge the audience, like we spoke of in preparation for this, and saying, okay, what's our background and knowledge of what a 1031 is? I think everybody on this call has heard the term, but what do we think it is, right?
To me, if you're going to open that up for me to answer,
Start it out, baby.
It's a way to defer taxes. It's a way to avoid paying the IRS and kind of defer that to a later date.
That's it. On its face, we are, again, investment property and getting like-kind property to put your net proceeds for that tax deferment and savings away from non-homestead property. We can get into business later, is business properties and entities. And that's what the vehicle is, to allow the investor to defer taxes on the net gain on the closing on said investment property.
Yeah, that's a huge one. It's the net gain. So any of your expenses into renovating the property, any of your real estate commissions that are paid out, those all get excluded from any of the tax liability that you would face when you do sell this property down the road. Is that correct?
That's correct. Whatever you choose to send to the intermediary, which is the vehicle holding the funds that you would have otherwise gotten into your account that are subject to tax consequences, what's put in the intermediary intermediary's account, whether it's a trust account, an IOLTA, like my firm's account, that is what is protected, if you will, with said tax deferment.
Got it. Got it. One of the questions that always pops up when I'm talking with people about buying a home or buying real estate in general is just how many days do we have? You know, you liquidate the property, you sell the asset, you've got your funds coming. Can those funds go into the personal account, or do they have to go directly to the intermediary? And then how long do you have to identify the property and then close to take advantage of the deferral in your capital gains there?
Sure. And the short answer to the first question is it's up to you. It's your money, right? You were the one that dictates what happens with these funds when you're anticipating this net gain. So, should you choose to accept some funds into your own account, like I said earlier, those are subject to tax consequences. Everything else, if not all, can be sent to the intermediary. So the intermediary receives your funds, and you have to identify the next property within 45 days. So the intermediary is ready, document, paperwork, all the above, to go ahead and put said funds into the next asset. So you get the entire benefit of the tax break. And you have 6 months, right? 45 days to identify, and then you have 6 months to close it with Mag Law and Justin's team.
Got it. Got it. So that's another question is when you buy the property, right? You've sold the asset that you had initially, you took your assets, you've identified, does it have to be just one property? Can you identify 5, 6, 7 properties? Is there a limit on how many properties that you can identify? And then
So you start, go ahead. Was it
and then
ending
to
to that before I
follow,
jumped in?
yeah, to follow that, let's say I find $1 million property and I've got 500 that I'm trying to put into 1031 exchange. Am I allowed
Okay.
to borrow the other 500K and still take advantage of the deferral in taxes?
So it's not a borrowing mechanism from the trust account or the intermediary's account, but to the volume question, that's when we start diving into a different part of the Internal Revenue Code, right? The IRS code. And we've talked about in the commercial sense or the volume sense, that's a 721 exchange, which is much like the 1031 for tax deferment and tax savings. But the volume is, again, 721. 1031 is that one asset right there.
Got it. Got it. From a intermediary perspective, can you explain who the intermediary is, what their involvement is, and how anybody on this call could find an intermediary if that was something that they wanted to do?
Looking at the chat too, I see Val's. Didn't know if there was a question too. Okay, it's just Val. The intermediary is the qualified person to hold the funds. There are certain requirements that you need to qualify for if you're the intermediary and someone holding funds, right? It can't be Justin and I are brothers and we do business all the time, and I'm creating a vehicle for my brother to get all these tax deferments. No, it doesn't work like that, right? It has to be more than arm's length, if you will. So someone who has a bona fide account, trust account, IOLTA, interest on lawyer trust account, that can hold the funds as a neutral in anticipation of buying that like kind asset on the back end.
Got it. Okay. And then to follow that, the like-minded properties, right? If I own land and I sell land, can I go buy a commercial space or a single family residential property? And can I still use the 1031 exchange with that?
We can get creative, and you probably can, right? But replacement properties, not just the identification factor, we have to have some sort of resemblance in legal description and how it's distinguished or identified. if you will.
Okay.
And the buttoned up intermediaries will really hone in on the like kind exchange, given its namesake.
Got it. And then what about going from state to state? If I have a property in Texas, I want to buy a property in Tennessee or North Carolina, still able to use the 1031 exchange, no issues with that buying out of state versus buying it in the same state?
So it's twofold here. And I think we talked about this, but my license stretches across state lines. I am allowed and licensed to do everything in this state, in the state of Texas, and not outside. However, we can close properties 1031 or not outside. So I can't speak to you in the legal realm in terms of what the 1031 ramifications are. However, it's a federal law, right? I mentioned earlier, it's the Internal Revenue Code. So in my estimation, the same rules should apply, absent any state laws that I'm not aware of that apply to different states other than Texas.
We've got a question in the chat. Thank you, Lauren. Let me pull this question up from Lauren real quick. Does the
can get to that.
intermediary, what's
Go
that?
ahead. I was
Does
just
the-
gonna say I can monitor the chat and let you you two go.
Yeah, I saw it pop up. Does the intermediary need to be in the same state as the sell or the buy?
That isn't one of the requirements. No, it's and the requirements aren't as hefty as one would think, but the licensing and background and experience are the hefty requirements. So the caveat there is what I just said at the last question presented. Just be sure that you are aware of the state that you're dealing in and what those local state laws might be and how they implicate a federal law like the Internal Revenue Code.
Got it. We've got another question. Thank you, Rick. Can I use stock investment proceeds to purchase land using 1031?
So notwithstanding even the land comment, 1031 doesn't apply to stocks,
Yeah,
doesn't apply to bonds, doesn't apply to notes.
it's the unique part of real estate, right? You hold on
That's
to an
right.
asset, let it appreciate for 10 years, 15 years. You sell it, liquidate it,
Yep.
and then you've already got your intermediary identified. So it's a different asset class. It's just for real estate.
That's right. That's right. No stocks, no bonds, no trades like stocks or bonds, notes, or like kind debt.
Yeah, got it. Another question, Justin, is Neo an intermediary? Lauren, no, we are not. We are a residential mortgage company. We are not an intermediary, but the gentleman you're looking at right here on the screen, Martin, I know he's in the works of becoming an intermediary. Martin is actually an escrow officer and closes a lot of 1031 transactions. So he is very familiar with the process, but he's in the process of becoming an intermediary for you. Great question. Another one that just popped up. Can our personal account under a trust qualify for exchange or have to use another intermediary?
Sean, what kind of trust? I mean, statutory trust, family trust, what kind of trust are we talking about? Because it does affect the answer.
That was
There was also a comment in here to share Martin's information. We will make sure that everyone gets the recording that's on here now and all of Martin's information. So you will be able to reach out to him. Family trust from Sean.
And I saw the irrevocable family trust. I always lean towards getting an EIN for your irrevocable family trust and dealing with it separately. I'm a lawyer. I got to think worst case. When you said personal account, I think that's what you said. I'm not a fan of that, and I don't advise that. Our personal account under a trust. So I would get the trust and a tax identification number, right? Either employment identification number or tax, whatever your tax professional suggests for your trust. But I wouldn't mess with putting funds in your personal account if it's tied to the trust. And that's what's part of the 1031.
So 2 questions on that. DST, Delaware Statutory Trust.
Yep.
go into that, please, because I think that would be helpful for people. And then a reverse trust. A lot of people don't know about the reverse trust. And I think that that's a unique vehicle, doesn't come up often, but for the right family, it could be very valuable. Can you touch on both of those?
Sure, sure. The DST, Delaware Statutory Trust, and a lot of you folks most likely know that Delaware is a friendly state for the entities and for investment purposes. It creates an avenue for folks who have trust perhaps, or entities, to pretty much be a sponsor vehicle to invest in the trust and ultimately gain from it. It kind of goes to the 721, again, the commercial and business exchange, but that's what the Delaware Statutory Trust pretty much does when you're dealing with your entities and a pool of entities rather involved in the same investment.
Yeah. One thing for everybody to know, to participate in a DST, you need to be an accredited investor. The definition of that is you have a net worth excluding your primary residence of over $1 million. And if you're a single individual, have to have made over $200,000 for the last 2 years. And if you're a married couple, that number is 300,000. So either or, you either have a net worth over $1 million, or in the last 2 years, you've made over 200 or 300 as a married couple. As far as the reverse trust, Martin, can you touch on that and like where that type of not a reverse trust, sorry, a reverse 1031, where that would be
Sure,
applicable
I
and why
got you.
that might be helpful?
Yeah. It is also its namesake. So one of the folks here on this call identifies an asset, however, hasn't sold the asset that the investment asset that they were intending to pool net proceeds into a like-kind asset. You will then deal with an intermediary and a company that can pretty much hold that purchase, help you purchase and hold that property in trust. So then you can apply the funds on the back end. It is the exact reverse. Instead of selling, putting your net proceeds into a like-kind asset, you find the asset, this company and intermediary helps you acquire it, and then the funds are held on the back end, or handled on the back end rather.
Got it. Another common question that pops up for the ability to use a 1031 exchange, does the property need to be equal or greater value, or can you find 3, 4, 5 properties that end up, equaling greater value? Can you spread it amongst several different, assets?
Yeah, the intermediaries that I've dealt with and my practice is you find a like kind, and I stick with the strict construction of what the rule says. And again, the identifying factors of what we are dealing with. Back to what I said earlier too, the requirements for an intermediary aren't as stringent as one would perceive. And that to me as a lawyer says, all right, then let's stick with strict interpretation of what the section 1031 of the code says. And my personal opinion is to stay on track with the like kind and land for a land.
Got it. Got it. Any questions from our participants at this point?
I don't think so, but Martin, have you seen any, or could you give examples of what wouldn't be eligible? Like when you say a like-kind property, have you seen any that didn't end up going through or being relevant to that situation?
Sure. Someone said lots earlier, and Justin mentioned volume. I've seen folks denied when you try to bring in multiple lots that the amount it's valued at is justifiable in terms of what you just sold, and it gets denied by intermediaries. So that kind of example is what would defy or not pass the like kind test.
Here's a tough question. I know that 1031s are involved, are really for investment vehicles, right? In an investment property.
Sure.
If we have an individual that uses a 1031 exchange, we buy an investment property, say it's a duplex or a triplex or whatever. 10 years later, life changes. That individual needs to move into one side of that triplex. Are you still able to defer the taxes on those assets, or what happens at that point?
I'm going to defer that to our audience. If they were listening to the first 5 minutes or maybe first 10 minutes, what would your answer be? As to the 1/3 or 1/4 that said investor moved into.
In my opinion, it's used for investment purposes. So if you occupy it as a primary, those
That's
monies are going to
precisely what
be.
it is. That's precisely what it is. We talked about homestead, and especially in this state when we're involving Texas law, where the homestead is heavily protected by the Constitution, you don't get the same benefits and deferments from a 1031 exchange.
Yeah.
You won't, yeah.
And then from a taxable perspective, right? So you got somebody, I don't know, I think the highest tax bracket right now is like 42.1% or whatever. Let's say somebody's in the 37% tax bracket. They sell a property, I don't know, net $5 million from the sale. Their cost basis is 500. That leaves what, roughly $4.5 million. Are they taxed at the tax rate? Are they taxed at a lower tax rate? What kind of a tax rate are they looking at, as far as what they're going to be taxed at?
I love it. I love the question. And like a typical lawyer answer, it depends, right? What type of entity are you using? Are you using an LLC? How is that LLC taxed? Are you taxed like an S Corp? Are you taxed like a C Corp? Are you an INC, a corporation? All of those things I just said are going to weigh heavily on how you're taxed, whether it's at the 42% or whether you've created avenues with your entities to be able to be taxed at the 20 some odd percent or even lesser sometimes. I'm
Got
not a
it.
tax attorney, but I'm very well aware of those avenues as well.
Yeah. Yeah. I had a situation that popped up not too long ago. I was listening to something, had a lady that bought a property super cheap. She updated it. This thing was out in California. Her total cost basis into the property was like 580,000 bucks. She sold the thing for $5.5 million. But the total cost basis, realtor commissions, you got to exclude roughly about $900,000 in cost. So
Right.
5.5 minus 900 left her with roughly 4.6 million. She was in the 37% tax bracket. So if she paid taxes on that money, 4.6 million times 37%, she was going to owe the government $1.7 million. Instead of doing that, she bought a $3 million property. So she avoided the taxes on that, for deferral, left her with roughly about, I don't know, $1.6 million. Then from the $1.6 million, she elected to keep that and pay taxes on that. So she went from owing the government 1.6 million to only 592, and was able to keep $1 million just in liquid cash to kind of do whatever she wanted to at that point, but was able to reduce her tax burden by roughly about $1.2 million. So for those of you that are on here, that's the power of what a 1031 can do for you, is defer that tax basis. Now, here's the grand old question. You die, you own the assets. What happens at that point?
You're subject to a lot of other parts of the code too. You're
Yeah.
subject to.
I know that's a loaded question.
Yeah, no, it's okay. I mean, I'm going to baseline it and bullet point it. Estate tax, gift tax, inheritance tax, and the like. Again, not a tax attorney, but 20 years in closing real estate and practicing, we see it. And yeah, that's what you're having to deal with. And the short answer is button it up with a trust that we've talked about, not just your will, but the requisite trust, and deeding your properties, your investment properties especially, and honing in on which entities own it, if it's not the trust, or if the trust is, or the entities are involved in the trust too. That's how you shield yourself on, okay, we had these deferments and now they're gone. And another short answer is the IRS is going to find out. Someone passes, then once a funeral home processes a death certificate, the IRS is going to know that the person is deceased. And guess what? We're done with deferment and with savings there.
Question in the chat. Heard irrevocable was a better route than revocable for estate tax. True? That irrevocable was protected.
Loaded too, but generally, yes. Generally, yes. The irrevocable is the tax strategy to, again, especially if you're talking about your own family assets, that includes real estate investment properties like we're talking about today. Generally, yes, that is the recommendation.
Got it. And then do you want to touch on the differences? It just brings up a good point. Irrevocable versus revocable, what the differences are there?
I mean, besides the namesake, it's more of personal opinion and approach and circumstance, not just value of the estate or the potential estate, ages of the players, not just the folks, the settlers putting trust property into the trust, the trustees, whether it's a bank or an individual that one trust, and the beneficiaries, right? So the revocable is a vehicle that, again, back to namesake, it's going to be more difficult to amend, change, or be affected in probate than an irrevocable. The trustee and the fiduciary has much more leeway and avenues to do what the trust asks it to do.
Got it. Got it.
Justin, was there any other questions that you wanted to review with Martin? I think maybe we open it up, and if anyone wants to ask a more in-depth question, we could bring it in. If they want to actually come in and talk, we can allow them to.
Yeah, 100%. I've asked quite a bit of questions, so I feel like I'm good on my questions. I think we kind
you're
of
the
touched
MC. I appreciate that.
I feel like we kind of touched
JP.
on a lot of things there, right? But before we do that, Val, I would say make sure that you know you need to find an intermediary. Make sure that you know you've got 45 days to identify the property. Make sure that you know you need to close within 180 days. It needs to be a like kind property. And then make sure that the assets, they don't go into your personal account. When they do, those assets are taxed. Make sure that those assets, all that you want to be considered and defer the tax on, you place those with the intermediary. I think that kind of wraps up really
A good
at the
sum
end of the
up.
day what a
Yeah.
1031
The
exchange
last
is.
bullet point I'd add is the relationship. Remember the hypothetical, Justin's my brother, and he knows that Martin's an intermediary.
Yeah.
We can't be doing these constantly just to defer taxes. That's something that the form you fill out and send to the IRS specifically asks, and obviously you can't be doing it, right? The closest I've gotten to something like that is when an uncle conveyed hundreds of acres down South Texas to nephew. We were able to prove enough of a separation and arm's length, but that relationship is key. And it's not just familial relationship. If Justin's my client or whoever is, I can't just give them the benefit of me holding their money to save them taxes. So the relationship aspect, again, not just familial, it's professional as well. That's one component I'd ask to the very solid recap that Justin offered.
Got it. Lauren's got a few questions. Val, if you want to bring Lauren on and let her ask those questions directly, that'd be great. Lauren, if you're comfortable, we'd love to have you off mute and go ahead and visit and ask her questions.
The off mute, I just don't think we can hear yet. Lauren, can you hear us? Is the golden question.
She's been asking a question, so I feel like she can hear us.
I know. Okay, so one of the questions that she has in here, maybe she can figure out her mic. How many times can you substitute one for another over the 180 days? So I think her first question was a little farther up. Do you have to identify the property you will purchase before you contract the property you will sell?
So the identification is different, a different timeline before the contractual. We've been subject to contractual effective dates that flirt with the identification timeline.
Okay, and then the follow-up question there was how many times can you substitute one for another over the 180 days?
I need more clarification on substitute one for another. Like, let me know where your head's at and what your angle is there.
We will,
So I'm thinking, Martin, on the first question, do you have to identify the property that you will purchase before you contract the property you will sell? Like you have to identify it. You could sell it. The risk is that you sell it and you don't identify a property within that 45-day window.
Right. And what was your question, Justin?
I was reading Lauren's question. It was,
Yeah. And that's what we're going over when
do
Val
you have
as
to
well.
identify the property you will purchase before
Yeah,
you
yeah. The
contract?
identification timeline is its own entity subject to a different code, not
And it's 45
necessarily.
days from the date that you sell the property. The date
It's
that you
40.
sell the property
It
is
is.
considered day 0, and then the following day is day 1.
Yeah, there you go. There you go.
Perfect.
Because that's when funds are right, and you're a lender, and that's when funding comes into play, whether disbursement happens on that Friday or Monday. If we have a funding, then that's ground zero, if you will.
Got it. Got it. And then how many times can you substitute one for another over the 180 days? What I think Lauren's trying to get at there is after you've identified, let's say you identify 5 properties, right?
Mhm.
You go under contract on one, you don't like the inspection, you bail,
Okay.
you've
Yep.
got to close within that 180-day window
Mhm.
from
Mhm.
the date of sale from your initial sale of that asset.
Mhm.
So that timeline doesn't get extended. You can identify the properties within 45 days. You can go under
Mhm.
contract. You can terminate that contract and go under contract on one of the other properties that you've identified in that 45-day window. But as long as you close within that 180 days, you're fine.
Right, right. And it goes back to the characteristics of the property and the value of the property and what your, now that we're, your hypothetical said 5, your gains, your losses on your sale, and what's being transferred into a 1031, what you received, that sort of thing.
Got it. Sean asked, can the money go into your personal account in that 45 days and then go out to another property and not be subject to tax as long as you put it in another investment before the 45 days?
So strictly speaking, again, not as a tax attorney, as a real estate and probate attorney, my interpretation is stay away from your personal account,
Yeah.
right? The question posed earlier was the trust. And if your personal account is attached to the trust, I'd say get you a tax identification number and a separate account for the trust. I don't ever like to commingle your personal account with anything having to do with your tax deferment.
Yeah.
Almost defeats the basis.
Sean, to be safe with that, if you liquidate a property, it's an investment property, take that money and put it with an intermediary. It goes into a personal account, you're going to be taxed on it. That's what I've always seen.
Correct. Same. And again, there might be some tax attorneys that might advise differently, but from closing these for decades and done them myself, I keep the personal accounts away, whether it's in just the LLC or entity context or trust context.
Got it. Got it. Well,
All
40
right,
minutes in.
we'll give a last chance. If anyone has questions, feel free to raise your hand and we can bring you in to talk. I know there was a few people on here that actively invest in real estate. So if you have a specific situation you just want some feedback on, again, we'll give a last chance here to raise your hand and come into chat.
I'm going to respond to Sean's follow-up that I didn't see earlier. So I'd welcome a chat, Sean, whether it's not tomorrow. If it's not tomorrow, then let's chat next week, because there are certain avenues that we can take to establish an EIN for your trust. And I'd like to know more about your specific situation, if I would advise that any of your LLCs or companies become part of that trust.
Yeah.
Perfect. Love it. All right. Well, it doesn't look like we have any more chats coming in. So, okay, good to go. Again, thank you all for jumping on tonight. I know that this is in the evening for everyone, so we really do appreciate you guys all jumping on. Martin, a big thanks to you. Thank you for being here with us. This was really valuable. Love the
Very much
engagement in the
so.
chat. So thank you guys for asking questions and engaging. We will send out a recording of this to everyone that's on here now, and we'll make sure that you have Martin's contact information so you can get in touch with him following the call.
I can go ahead and type it up too if folks are still in, want to take it. I'll put email, and I'm
Perfect.
a texter. You all
If you
feel
want to put it
free
in
to
the
text
chat,
me your contact
please do.
info. I know I recognize some names in there, but I'll go ahead and send it out.
Hopefully this was helpful for everybody. That's the goal with these webinars. It's not about mortgage. It's not about title. It's about continuing to add value to your life. Whatever you're going to face, part of our commitment to our clients when we work with clients is we're not just debt dealers. We're not just trying to put you into debt. We want to constantly bring value to you. And this is one of our favorite ways to do that. So if you're a client, if you're a realtor, if there's something that you want discussed, send it to me. I'd love to hear your feedback on things that you'd like to learn about, know about. And maybe I've got somebody in my network who is an expert at it. I'm not the expert at 1031 exchanges. Martin is. So we bring them on. So if you have anything that you have questions on that's real estate or finance related, please send them our way. We'd love to have a webinar around it. And there are going to be some other topics. We'll have some mental health professionals. We'll have health and fitness, wellness. We'll have financial planners on. We'll have insurance advisors on, talking about how you can use an insurance product like your own bank, different things like that. So please let us know. Thank you for being here. Hope you have a great night and have a great Friday tomorrow and a weekend ahead.
Thanks, guys. We'll chat with you next month.
Thanks, everyone. Thanks, Justin. Thanks, Val.
You bet,
Yep.
buddy.
Bye, Martin.